So let's run the class. So today's class is our latest edition of Scalper's Mindset. And the reason I started doing this class this month, and we may or may not continue it, we'll see, but so far the results have been good, is it's just critical to understand that if you're a scalper, your mindset has to be really clear that you're scalping and have nothing to do with which way you think the market's going or where you think there's support and resistance or what recent price level you liked. None of that matters when you're scalping. The only thing that matters when you're scalping is staying focused on the price action, not trying to predict it, but just going with it and having a sense of the context. So the first thing I always do when I arrive at my computer to scalp, whether, it's in the morning before we open, or it's when I wake up in the middle of the night, or when I'm walking by and I say, oh, wow, look at that, let's trade it. As a scalper, I trade anytime there's a setup and I happen to be at my computer, which, varies. Sometimes it's an hour or two a day. Sometimes it's never. Sometimes I'm, in the room all day doing something else, watching the Formula One race, whatever. So this is the first contextual view. What is going on in structure? And, we talked about this in the IDE session this morning. All the ESYM and RTY are working giant ranges. You can see the TPOs up here. And NQ has been much stronger because last week tech got bought while banking was melting down. So it actually broke out of its range. You can see that here. I kind of zoomed out so we could see it. So today is the opposite. Today, tech is getting sold, particularly Microsoft. And the financials, lo and behold, look at this. They're strong. And the whole financial sector is strong, but it's really not that strong. If you look, how much are these up? 1%, 2%, 3%. It's might even be a dead cat bounce for that sector. But it's not hard to see what's happening today. There's a rotation out of the tech that we were rotating into Thursday and Friday, and we're going to all the other categories that we weren't in last week. So, it's not a bullish situation, but you can certainly see that we're going up or down. And so, NQ, it makes sense. It's pulling back a little bit because it was so strong. So that's my point here. Other than that, everything else is range bound. And, we've got some good artifacts to trade toward. Well, right now, actually, we have an interesting situation here. There's a little single print right below us here in NQ. That's crunched, not crunched. Same story here in ES. So, are we running out of gas? We're getting toward the top of the range. I'd love to see a test of the top of the range in ES. Between now and FOMC, because that would just be a real logical place to play back into the range again. So that's pretty much the scenario. I've got my two faster footprints on 3 minutes right now. Let's just pop out real quick and look at the rotations on the 30-minute market profile segments. And price rejector at the top. We've got a zero print in the middle. We did take out the overnight high. In the case of ES, we did not in NQ. So, it's moving back and forth in a range. That's pretty obvious. I just put that back to 30 minutes and I wanted to put it to 3 minutes. There we go. All right. So that's the context. The internals opened fairly strong and have held there. The tick's been above zero most of the time. A few times we shot down below it. Those were good buying opportunities, by the way, just coincidentally. And, we're holding up. So all eyes on FOMC on Wednesday. So between now and then, can we make some money? Yeah. The range. It's always about the range. And that's what I was doing right when you guys came in. I was just fading the range. And I've been scalping the range both ways here. So let's go back to the main screen. So second half of Scalper's Mindset. Step one, what's the context? We know what it is. We just looked. It's pretty clear, and that doesn't change very often. So I only look at that monitor over there when I think something's changing. Other than that, I want to see the range. And my LRCs give me a sense of the short-term statistical range. It's regression. So it's not highs and lows, but it's best fit. And, we have a pretty horizontal range here. It's teased up to the upside a few times since we opened, but hard to call that a trending market. It's pretty much the top of the range is the way I would describe that. And if you look at the dome, it looks pretty much like that. Look at all this absorption in the high 80s and the liquidity that's still sitting up there. So whenever I see that, that's also supportive of fading NQ, which is what I was just doing a minute ago when it was at the top of its range. So, this is all about the ranges. And as I said in a bunch of the sessions last week, momentum is king, and we have clear ranges. So, as your scalper's mindset, what should that be telling you? Well, it doesn't get any better than this is what it should be telling you. You have a predictable range. The extremes of it, while it may overrun them a little bit, they hold, and it ultimately trades back into the range. And momentum is king. Which way are we going? How fast are we going that way? And what spots are nearby we could play. So given all that, right now we're kind of in the middle of the middle. We're almost at the low end of the NQ range, but it's not at any particularly interesting spot here. So this is kind of where you say to yourself, and I say this all the time, you got to let NQ come to you. So if I could tell the market what to do, if I was capable of saying, okay, here in the next 5 minutes, I want you to do this, what would that be? That's my, that's my ideal. So where would I like to trade this market, given what I just said about everything? Look at NQ, kind of trying to catch up. The RTY and YM are strong. Again, the exact opposite of last week. So I like fading that situation because no one's rushing into the NQ equities. So up here it gets real interesting, and that's what you saw me do. If you came in a little early, I was fading up here just because it was building volume, but it was running out of gas, and this was getting absorbed at the same time. So that's one thing. We get up to the top of the range. I like it short. I'd love to see this break 0-0 because it got to 97, and that's how it likes to play. If it broke 0-0, we'd probably get up to 7 or 10, and that's a perfect place. Between 10 and 20, I would fade the heck out of this because that gets me right up to the edge of the statistical range. And it also gets me just above the recent highs, which is always good to take out people fading every recent high. And we are above that. So again, a little push up into here, that would almost get us to SD2 of the VWAP. In other words, 2 standard deviations away from the VWAP. And you can see the VWAP is down here right now. There it is. So this is an interesting short, but not here. So that's what I mean when I say you should be building binaries in your brain when you're watching the price action. If I could tell the market what to do, what would I tell it to do, and then what would I do as a result of that? And again, this would be a beautiful short if we can blow through 0-0 here with signs of absorption, particularly in ES, because clearly ES, YM, and RTY are all fairly, they're on almost the 1% side. And if you recall, 1% is a roughly trending market. If it gets above 2% or 3%, that's really trending. So, these three are trying to trend, and NQ is just trying to, get above 0. So that's a fadeable situation unless, all of a sudden everyone starts buying NQ again. And it's pretty clear that's not happening because, again, if you pop over to your internals, the tick just went negative. So this actually could be a place to look for a long. So let's think about that. What's the other end of the range? It's right below us. That's interesting. Is there a high volume node to lean on? Not really until about 50. So I'm not crazy about the idea of a long here, but it might be a long anyway. It could be a stealthy long from here up to the top of the range. So that's worth watching. Again, there's really no spot to lean on in ES. If we were down at the top of the value area, that might make some sense for a long, but I just don't like it here. We're still in the middle of the middle. So we'll leave that said. I see a few comments and questions. Do I cover right away or do I use targets? Well, my way of trading, of scalping, is that the second I have profits, I try to protect them. If that costs me the trade and I get out profitably, that's okay with me. But let's say I was trading, a 1+1 type situation where I had, a block, I was taking off half of it and then leaving the other amount on, whether it's 1 or 2 or 5 or whatever. In that scenario, I can protect pieces of it. So I tend to be a little bit more loose with how I will protect profits. So, but one of the things I've learned trading scalping is that things can change really, really fast, and you can have a profitable trade that can go away in a heartbeat. And so rather than dealing with that, I just choose to protect my profits. So that's why you see that in my live sessions over and over again. The second I'm profitable, I'll try to get a take profit stop between the current market and wherever I entered. And, that does cost me some runners sometimes. But again, the way I deal with the runners is I trade multiple contracts and, get the first ones off quickly and then maybe let the runners go if it justifies that. So that's the answer to the question. MNQ to trade short, 710. Okay. Yeah. Gosh, I don't know. See, you're thinking more like a trend trader with comments like that, Summer. And I'm really just focusing on the price action. That's a little too far away to be too much of a binary. Because there's likely to be a long before that on the way down, testing the previous levels in the range. But, again, in this market, we're having so much movement that it is also a good idea to keep in track of recent inflection points. Never hurts. Let's see. Can you define the difference between context and the big idea again? Yeah, okay. Well, I don't use the term big idea very often, but for me, context is if I had to describe to somebody, this is really important. Listen to this for a second. If I had to describe to someone who was not a trader what's happening today, that's what I refer to as context. So let's go do context again real fast. I don't do it very often. When it changes, I do it over, but let's do one right now. So here's context. What's going on right now? Again, as if the person didn't really understand the market, then, we're range bound, and the place that there was strength previously is pulling back a little bit, but still is stronger than the rest of the market. So this doesn't give me any big ideas when the market is momentum driven. This just tells me that, until further notice, we are range bound, which means from Jeff's point of view as a scalper, I'm going to fade the highs and buy the lows. It's that simple. So that's context for me. And then I come over and I look at, what's the price action right now? And I try to say to myself, okay, within this price, that context that I just described, are there any good setups? Well, yeah, there's a good short up here, and there might be a long on the way up here. That's very possible. And then, where do we find a good short going down? Gosh, it would have to lose 20 really hard, but then it's still on the VWAP. So yeah, this doesn't get interesting until it blows through 0-0 at the other end of the range, which is a long ways down. That's 60 points down. So that one doesn't get interesting to me at all, long or short in here. It's just too big a range. Remember what I used to say in the dynamic range sessions, which are in the library. Let me bring that over here. So this is the quote board from Sierra Chart, and you can see the daily range here for Globex. So 24 hours, not the RTH range that I use for this. And the NQ range is 225 points. So it doesn't get interesting until we get to the extremes of that. To even think about the market breaking down and getting short or for really aggressive longs. So, the dynamic range, and you know what, let me do a really quick review of dynamic range because today it is really relevant. So here, I'm going to draw real fast. I know everybody loves when I draw with my mouse, but this should be helpful. So this is the best way to assess that, in my opinion. If this is, we have this 224 point MNQ. So this is the Globex, the high, and this is the Globex low. And then since we opened, it's been a lot quieter than that. The low is around 530 right there, and the high is just under 700. So, that's a lot smaller. That's 170 points. So, that's a big chunk smaller than this. In other words, let's see, looking at, it didn't take this high out. So we're down here somewhere, and hang on, I need to see. And we didn't take out the overnight low either, although it looks like we got real close to it. Hang on, this is a Zoom pet peeve of mine. I can't point to something on my other screen without turning off the drawing tool. And we got right to the overnight low here. So we just tapped it. So let me get back to my drawing. So basically, we kind of have, this is our RTH range right here. And the outside is Globex. So we basically are staying within the overnight range pretty predictably right now. So in this situation, the dynamic ranges are telling you, odds that we're going to get up here are pretty low. Odds that this is going to go aggressively are pretty low. Odds that we get down here at the moment are pretty low. We have a really clearly defined statistical range that's much smaller. And that's the key point here about the whole dynamic range discussion. Let's get a different color here. Okay, so if you look at the dynamic range right now, the high is just under, big fat whole number. So, that is also the RTH high. So right there gets us to about the top of the short-term range, the statistical range, and we're at the bottom of it right now, and that's only like here. So if you look at it that way, you have a place to play without worrying about the extremes in a range bound market. And I've been asked by a couple of people to teach a class just on trading the range, and it's coming. This is kind of a preview of it from the scalper's mindset point of view. So until this range breaks significantly, then we should just be fading one end or the other, because there's no indication that it has any propensity to break right now. But if it wants to break to the downside, we're certainly at a spot it might. Look right there. So this is a really good opportunity right when we're at the edge of a range like that to pop back to the domes and watch what's happening. How is it trading right at the edge of that range? Because it's usually scalpable back into a range if a range doesn't break. So let's see if that happens. At the top of the value area is right below us in NQ. Let's see if we're getting any absorption in ES. The top of the value area is a little further down. Okay, here's a little bit of selling right here at 50. Again, 50 is often an inflection point for NQ. If it holds below that, we want to look to be buying maybe 20 or 30. If it gets back above it, it'll probably go back up to the other edge of the range, which is about 70. So there's a really good opportunity right here just because we're at that boundary, and it's real easy to game it. You can game it just like you could game the actual ledge, but it's a range you're treating like a ledge, as if it was down here. You're treating it as that significant of an inflection point. And often, like I said, you can catch some pretty good ticks either way just by watching the trade. And right now, this is pretty balanced. It hasn't gotten above it. It hasn't gone below it. There's a little battle going right here. So we can kind of see what's happening in ES at the same time. Price rejector at the top. We left a 0 in the middle and a decent clean bottom. We're below min delta, so sellers in control. So same story. ES is saying the exact same thing. There's an inflection point here. Whichever way it breaks, it's going to be in control for a little while, but it's not breaking very far. So see, there was some absorption right there to 45. I almost like this long here. In fact, you know what? Just to demonstrate it, I'm going to take a quick long here. Just because, see, it's showing that there's both buyers and sellers playing here. So, the odds you can go in and grab some quick ticks without getting really run over in either direction are pretty high. Now, that doesn't mean the bottom won't fall out and it won't go down, but there we go. That filled profitably, and I wasn't able to add to it, although I tried. Look how close it got. So that's a really good example of how, if you understand the overall context as the big picture, and then say, okay, is what's happening now making sense within that? And this is making total sense. So in effect, what it's given us is a really tradable range. You can just be scalping this range back and forth all day. And, I posted my P&L a minute ago, but in the pit, but, just to make the point, I'm at $1,000 so far doing this. And, before commissions, take $150 off of that. And, there's no trade was worth more than 20, 30, $40 at a time. It just keeps adding up because it keeps working, and it keeps working because we're in a definable range. And, it's that's the scalper's mindset you have to get yourself into. Is there a trending behavior here? No. So is there a tradable range? Yes. And where is it? Well, it's pretty clear. That's why I like LRCs. They're really good at helping you see where the tradable range is. And now it just pushed down again. So, this could be setting up again for another opportunity. I like this a lot better if it can get down here into the value area just a little bit and maybe test the 20s, which, as you guys know, I love to buy the 20s if we're above them and heading down. It's a good place to bounce. So that's worth watching. But right now it's getting sold a little bit. So, you could play short. I wouldn't be aggressively shorting this market. It's showing, overall some strength. The only weakness is a little bit of rotating out of tech, which has been scalpable long anyway. There's another one right here. So again, just, watch the short-term price action. Here's the volume. Boom, another $5 bill. And you could be doing this with the mini, and those would be $50 bills. I'm not trying to show you how much money I can make. This isn't, Jeff's trading room where I'm selling, get rich quick. This is a technique for scalping the market based on the very short-term action, keeping it in context of the daily session action. And, once you do that, this just goes on all day, over and over again, particularly going into FOMC like Wednesday. And don't forget, I'm doing my Wednesday opening class. And so I'll show you guys some more of this. But the purpose of this class on Mondays is just to, for those of you trying to learn scalping or get better at it, is just to keep reinforcing over and over again that once you understand the context, there's nothing you need to know except where's the traded volume with respect to the short-term range. And that'll give you thoughts to play over and over again. Here's another one. This one, again, it keeps getting sold here. We're not bouncing much, but we're bouncing enough you could be making money, and you might get lucky and catch a big rip. If it starts going down further, it actually sets it up better because I really like it here better than here because there's something to lean on. So, again, the whole idea of this particular session on Mondays is just to beat this stuff into you. So you just see the repetition over and over again. And I think that's really valuable as a student. Oh, look at all this absorption down here. It's pushing down aggressively. This is going to be a sweet long down here. Might have to swarm into it, but it's going to be a really good long. Prepared to add to it. There we go. We're already profitable. Take one off right there. See if we can catch a runner on this one. I'll scoot that out of the way, and I'm going to try, again, protect this as fast as you can. So now at least I won't lose money. I might make more money, but I won't lose money, and I can kind of just keep that right on the most recent volume. Let's get rid of this guy. All right, so here's the next most recent volume right there, so I'll put it up there. And so that just got me 10 more points just by watching the volume. So again, perfect example. Look at this exhaustion. It traded into the bid. There was all these bid, below bid, below bid, all these big blocks, and it didn't go down. Whenever you see it trading into the bid and it's not going down, that means the buyers are aggressive. They're absorbing all the sellers. And vice versa, when you get up here, it's the other way around. Look for it to trade into the ask. And if it starts doing that on a pop-up, like it's doing right here at 31, that's a warning. You know what? If you're scalping long, you might want to take profits because that could be the end of the move right there. It's getting absorbed again. So if you just dial your brain in on where's the range, where's the traded volume, is there a place I can lean on here, that makes any sense? And you can do those over and over again. It's funny, when I do this subject, I feel like a broken record because I feel like all I do is repeat myself. But I also understand from coaching people that this is something that takes a lot of repetition to learn. So that, again, is the idea around this session, that you guys can see what I think of the context, see the range I'm seeing and how I'm playing it. And, just enough repetition of that, hopefully some of it starts to land. Look at all this absorption we're getting here, and it's mostly on the red side. In other words, the bid side. So once again, this should be an inflection point for a long, but it not necessarily. But at the moment, that's what it's looking like, in both cases. It could certainly push down farther, and then it's a better one, as long as the bottom isn't going to fall out on us. That's the only thing we don't want happening. I had to mute there. Okay. So, and also always be mindful of what the equities are doing while you're doing this, because right now the equities are trying to sell off a little bit, and that's why we're seeing the weakness in the futures. But they're trying, but they're really not selling off that much. So again, look at the absorption at the lows, even though it's trading down there really aggressively to spook everyone out of the trade, and then the larger traders that are more aggressive are just stepping right up, and they're picking up 10 points on the swing. So, okay, let's see. Let me look at the comments and questions. Why do I like trading overnight? Do ranges respect edges more? No, the thing about the overnight, the reason I like it is the equities are not trading, Jeffrey. So everything is speculation, and I am a very, very good speculator. That's the answer. The patterns are more technical, because there's nothing else to lean on. But if you try to use technical analysis, it can be very deceptive. But for example, let's say, we might have another long coming up here. I'll continue this answer in just a second. We're right on that volume I liked. Let's see if it gets bought here. And just for fun, we'll throw, if it sweeps down, it'll come get me down there like that. Oh, that was perfect. That happened exactly the way I want. Did you guys see that? Go back and watch the recording, because you can predict sweeps down that are coming like that and get really advantageous entries when it does do that, like you just saw me do. And now I'm just, I've got a profitable trade here. I'm just trying to figure out where to try to exit, but I'm also looking to add to it. So, let's see. Oh, that was too funny. It did it exactly as I was explaining that it frequently does that. And I love when that happens. That's just so cool. All right, there's one off. Let's see if we can protect it again. took the profit. That's what I mean. If you protect it and you get filled, then so what? At least you're not at risk of the big drop and giving your profits back. So that was a good example. Okay, so anyway, back to the overnight. So here's an example of something happens in the overnight. If we got up to this ledge up here and we blew this 97 ledge, you could fade 20 in a second in the overnight. During the regular trading hours, you might get to 20, but it's gonna blow through 0 0. It's probably gonna pause at 7. It's probably gonna pause at 12. Then it might trade 20 and you get the good setup. In the overnight, it will go through 97 and be at 20 in a beat. You short 20, and the next thing you know, you're back at 92. The overnight just trades really speculatively like that, because the people that are trading are speculators, because the equities aren't trading. So therefore, there literally is nothing. The thing we're derived from, we can't peg its value to it. So it's just pure gamesmanship. And again, that's very suitable to my style of evaluating ranges and energy, of zigzag swings and extremes of the VWAP. So there's your answer, Jeffrey. Good question. Okay, clarification. I missed what you started the session with. There was a difference in context and something else. Oh, no. Okay. Yeah, no, I was playing around before the session started. But my point, Maria, was just that as a scalper, you walk up to your computer. If you don't already understand context, you need to do it real fast, like you just saw me do. What's going on? Where are we? Okay. And then from that point forward, unless the context changes a lot, you can just trade the price action. So, but my point is, I'm trying to make a really clear distinction between evaluation of the context and executing price action scalps, which really don't have anything to do with the context. It just keeps you from making really stupid mistakes, like, fading a trending market and whatnot. So that's what I meant by that. Cool. I love aha moments. Aha moments are wonderful. So let's see. I love it, Summer. It's nice to have you back. You should join us more often. Okay. Thank you, Robert. I will keep repeating. Yes. Okay, cool. So anyway, we're almost at the end of the session. The whole purpose of this session is to be a real short and sweet. Just, I walked up to my computer to scalp what's going on, and we have a setup right now. We're holding the VWAP. We're trying to. I really like this, like that. I might buy it here. See if we can catch a push back up to maybe the mid-20s. But again, this is just so predictable. The range edge, that doesn't mean you automatically play long. It's getting sold. But I'm looking for exhaustion here and absorption, and I'm seeing it. So a push down here will be real nice. There's a little high volume node there. We're still trading around the VWAP, and then maybe I can catch a pop back up on 2 instead of 1. But right now I'm playing 1 because I like the setup. So again, it should revisit the low 20s at least. So, if I put that there, that should fill. And sure enough, it did. Again, broken record, but if I repeat it enough, and if you guys see it enough, you'll start practicing it. And I know I've given a number of you that assignment. I've had a couple of people I'm working with privately, and that's one of the things I've got them doing now. It's real easy to scalp ledges because it's so obvious when you have a ledge like this where you're right and wrong and where the volume is. But when you're in the middle of the range, it can be hard to figure that out. Use your LRCs and use the traded volume, and look at all this absorption down here at 14. Again, when you see that, it should be real easy to catch at least 5 points back to 20. It just, because people are buying there, and why? Maybe they're covering shorts, but the trading between high volume nodes in NQ is really consistent. A lot harder to see in ES because overall the volume is better. So you can see it in ES, but you really have to look at footprints and look for artifacts on the footprints. Price rejector up there, nice sweep down. We still have that 0 print. We're trading below min delta, so the bears are in control. But I'm scalping long over here in NQ. So, why? Because it's at the edge of its range and there's clear absorption. That doesn't mean it won't trade down to 0 0 real fast. And, again, I like that trade even better. But I would be careful if it really aggressively broke down, because you can see, on the way up here, that's where all of the buying started. So if we start to get much below 10 and 0 0, we might test the other end of the range here. So that might be worth sitting on your hands and letting it come to you. So, it's a dynamic environment. It's constantly changing. And your only mission, once you understand the context, is to execute against what's happening right now and use the tools to help you understand that. The statistical range that the LRC gives you is really, really useful if you understand how to use it. It's primarily there to keep you from being really wrong. It's not telling you should be getting long down here or short up here. It's just telling you if you're just totally wrong. Like, if these things get sloped to the downside and they're all parallel, and if you've been in any of the dynamic range classes, I've mentioned this many times as well, but when the LRCs are like this and we're horizontal and that one's like that, this is basically a poor range right now, but it's holding it. Okay. But at the same time, if you see it looking like this, that's statistics telling you that the market is trending. That doesn't mean it's a long. It just means if you're short, you better be really careful because these things have a habit of keeping going. And the same thing to the downside if it was like this. Parallel indicates that all of the different statistical evaluations at the moment are saying that the most likely area, the best fit, is down here. And conversely going up, it's in here somewhere. So you just have to be mindful of that. But when we have these, roughly horizontal ranges, it becomes much easier because it generally respects them. It takes a big change in the volume or a big change in the delta. It takes something happening to change it. Like, look at this up here. It got right to the edge of the range. The delta got really positive. What does that mean? Well, it was getting absorbed. It was trading into the ask, and every single trade was going by on the ask, and it just stopped going up. That's a classic definition of absorption. And then what happened next? Boom, we came right back into the range. That's what it does. So, again, the only mistake you can really make with this stuff is overthinking it or trying to use some sort of indicators to give you a better edge when there is no better edge. The edge is reading the price action. That is the opportunity. And it works really well. All you got to do is practice it. Don't try to predict it. Just say, okay, from right here, what are the thinking in bets? Which way is it the most likely to go, and can I get any money out of that movement? And it's powerful. Also, don't forget, TRG members, in the pit. I post this all the time, but some of you are newer, so this will help remind you. Oh, hang on, streams. The document I was trying to show you guys, which is in the TRG process stream, elements of my scalping decisions. This has all of the pieces on it, and that's where I was trying to go. So refer to this document because all the things I've been talking about are in this document here. All right. Anyway, that was frustrating. Yes, appreciate it, JVC, exactly. All right, so let me scroll back and see if I missed any other questions. I did not. Okay, cool. So we actually went a little bit over because of that, but this is some fun action. There actually is another trade here right now. We just got a little sweep down there. Let's keep an eye on that. Lagarde is starting to talk again, so that could be part of it. But I like this here. Wouldn't necessarily, a sweep down there that fills me would be interesting. And then an add down to about here. So this is a 1+1 setup. You can see, look at this absorption. It's going to push it down. That should fill. I should get a fill there. Let's scoot that up just a bit. And this will be the last thing we do. I just saw this setup and said, oh, this is cool. It's accelerating down into the bottom of the range. You can usually get a nice long off of 92 when it does this. And maybe it'll overshoot and get the low 80s. So let me see if I can get 2 on if it tries to do that. So looks like I should. I'm seeing some good selling over here in ES, but there we go. Okay, there's the first one. And again, it's just a snapback that I'm playing here, just, from the extremes. I really want this one, but I may not get that far down. So, and again, I'm not trying to show you how much money I can make. I'm just trying to show you that this setup is pretty consistently accurate. And here it goes again. It's going to pop up right now or not. There's the absorption into the ask. It wants to go down. We can add a little bit under that circumstance. Let's see if we can there's absorption there. So now it's perfect. Now just a retest of 0, gets the first one off. And that's just a really common event. So it doesn't mean it will happen, but I'm going to swarm into this just so you guys can watch it. We'll do a little baby swarm here. And, just to pop back up into the range because we're at the extremes. The tick is really negative right now. It's at minus 1100. So there could be some bad news hitting the market, which could pull me off sides here, but I'm not horribly worried about it. This is the spot I really like a little more. Okay, so, and we'll just take these all off right here on any pushback to 0 if we get one. There's some selling. That was a big chunk of selling. Let's see what happens. So there's obviously some news hitting the market here because we're really volatile and the volume picked up. So, that could affect the quality of a range trade. It's important to know that, but I think we're going to scalp some profits out of this real quick right now. So come on. Whoa, God, I keep getting just touched there. This wants to sell off. So let's get this off quicklier. How's that for an English word? Quicklier. Okay, so yeah, I'll let you guys see me play this because I'm a little off sides here, but not much. A bigger push down, I could scale more aggressively, but I don't want to try that yet. I like the absorption here, but it's not getting any traction to the upside. I'm sure it has to do with whatever she's saying or whatever other news might be in the market right now. So I don't want to scale too much more aggressively here for that reason. Here we go. Okay, there's the profits, and we're out. And that's nice. That was a $25 for 5 lot. So again, you can do this all day. You just have to respect which way we're going, how aggressively. That's a little bit of a dangerous one because something's going on. Obviously, the market has gotten a little crazy right now. So, and again, I think that's because of Lagarde's speech, which just started. And they also had the ECB meeting earlier. So anyway, all right, let's see. How do you tape to confirm your trade? Absorbing rushes to mind. I don't understand the question. How do I tape?
I'm guessing he means used tape. I think he probably left out used.
You mean these? Yeah. Basically, what I'm doing there, I have momentum tails turned off, for example, right now on this dome. I'm watching the one lot one for momentum because look at that crazy momentum right there. And, fading big chunks of momentum is always profitable. So I'm doing it right now. Let's see how far down this can go. Because, there will be a snapback. A question of how heavily you swarm it. And, here's just a baby 2 lot, but, you can scalp ticks off of these sudden movements just because of the movement. Here's the place it sold off from right up here, and it's trying to get sold here. And again, 72 is an area that it likes to trade off of. So it's a good spot to just play the volatility. And, again, here, just for demonstration purposes, we'll take them off fast. And, as long as you've got, volume and the momentum is controllable, those big sudden pushes down work in your favor if you're trying to scale into it. And, as long as I don't think the bottom is going to totally fall out here, which it could, but, we're still okay. We've got a little bit of downside energy. All right, now this is a really interesting spot. So let's do that. And do I want to take another one here? Not yet. I'm sitting right on the market button, but I don't want to scale this too fast, which is the key to swarming, is not to scale too fast. And always take some initial profits when you get a bounce if you're off sides like I am, because I'm swarming myself into a profitable trade. And you got to be careful. You don't want to end up with 20 here and be off by a few ticks. You want it to help you. You're not scaling into a loser. You're using the sudden sharp movement to help you improve the quality of your position. If this really rips up, I could catch a big ripper up. So let's take off all the first 3. And then now I've got a really nice setup with a protected long. You see what I mean? That's how you do that. That's how you scalp a range. So boom, took the last one off, put another $25 in the bank on another, 4 lot, so take off $4 for commissions, $21. It adds up, we're at $1,300 so far today. I am copying, but only to 2 accounts. So this is just multiplied by 3. Okay. Anyway, so the first one is about momentum, Jeffrey. I started answering your question and I took that trade. The one on the left, I'm filtering for blocks 5 and above because that's a really good way to confirm. Like you can see there was absorption right here and you can see it right there. Look at all those blocks traded on the ask and now we're above there. So, this is real buying here. We're trading into the ask and it's getting lifted up. So you don't want to fade this stuff when that's happening. The next place to fade might be up in the low 90s, but this is legitimate buying, or at least it's short covering off of the push down because I can see the blocks are trading and then see the ask is getting lifted up. That's a sign of upward momentum. The people that are selling can raise their offers higher up. Okay, that makes sense. So anyway, now you can see we're seeing a little absorption on the sell side here, and there it goes, pushing down a little bit more. So again, if you just dial in on that, and I like running a one lot tape of, and the other thing that's important is this is MNQ, and I'm running the tapes of NQ because I can't see the NQ dome, and I want to make sure that NQ is trading the same way that MNQ is. And they don't always. Sometimes you'll see absorption over here and you won't see it here, and you can trade it because you know NQ is doing it. And sometimes you can arbitrage an MNQ movement based on the lack of absorption in NQ. So that's a more advanced skill, but that's why they're there. And that's why I put them back up, because I'm just totally focused on MNQ and, doing between 1 and 100 lots at a time of MNQs. And, it's just been really, really profitable. What can I say? I posted all my results last week. So you guys know everything I'm doing pretty much, at least in these accounts. And yeah, it's broken record repetitive stuff, but I think it's helpful. If you see it over and over and over again, it'll hopefully start to land. Okay, we're running over, so I'm going to go ahead and say any burning desires, any final questions. Otherwise, we'll wrap up and we'll see you guys tomorrow. Lee's got some stuff on the calendar tomorrow, I believe. JVC, let's double check that.
Yes. No, sorry. Tomorrow's Tuesday. Yes. Fishing trip tomorrow.
Yes, that's right. We have the fishing trip tomorrow. And then Wednesday, I'm going to do my Trading the Open. And then we have the FOMC scalping on Wednesday also. So join us for that, everybody. And otherwise, look, we're right back at 0-0. Lo and behold, again, I could have held that long a lot more. I generally err on the side of taking profits too fast. Why? Because in an instrument like NQ or MNQ, it keeps me from just getting totally run over when it goes against me. And yeah, that does cost me some profits by doing that. But it's a habit I developed about 15 years ago trading YM that, if you have profits and you protect them, the worst thing that happens is you get out of your trade with less profit. But you never have a winner become a loser. And winners that become losers is really frustrating as a trader. So that's the main reason I do that, and I recommend that. Okay, Summer, thank you. Thank you, everybody. I appreciate all the good feedback, and I'm glad you could join us. I hope we get a bigger crowd, so spread the word. But I always love to see good long-time TRG folks joining us. It's fun. All right, with that, we'll wrap it up. Thank you, JVC.
Absolutely. Catch you guys later.
See you guys later.